Hello, everyone, and welcome to the Nasdaq Dorsey Wright podcast for this Wednesday, December 2nd. My name is Ian Saunders, and joining us as well this week is Sara Maley. And Sara, it's hard to believe coming in here, first podcast for the month of December. Only 5 podcasts left in the year of 2020. Kind of hard to believe that we have already arrived here, as I'm sure many of you out there are feeling a similar mindset when we entered the month of December here. Coming into the month of December for the markets, seeing muted movement today, at least at the time of this recording, with the indexes posting slight losses generally kind of across the board after we got further pushes up to mark new all-time highs yet again for many of the major indices after market movement there yesterday with the first trading day in December. Saw the month of November coming off a very strong month of November for most major domestic equity indices, with the Dow posting its best month since 1987, and the S&P 500 also posting one of its best months since 1987 as well, up over 10% there for the month of November for the S&P, putting it there in actually the 4th best month since April of 1987 for that broad market benchmark. And coming through as we entered the month of December here, we got that additional push through back to the upside, up about a little bit over 1% yesterday for the S&P 500, which if we come in and look at the 20-point chart of the S&P 500 on the Dorsey Wright platform, we saw that additional move to the upside yesterday printed the new all-time high on that 20-point chart at 3660. So that chart is now sitting on multiple consecutive buy signals, 4 consecutive buy signals to be exact, with that most recent buy signal occurring on November 24th, kind of matching that previous high from earlier in the month of November, 3640, and then that further followed through to the upside there yesterday. So some of the movement we've seen throughout the index over the course of the month of November has led to some additional support levels that are offered. So the index isn't too heavily overbought, sitting at a weekly overbought oversold reading through December 1st of 65%. So creeping a little bit more towards overbought territory, but not quite what we would consider to be overextended just yet. We have a support offered on that 20-point chart at 3560. It's an additional support directly beneath that at 3520 before you get down there to the middle of the trading band. So definitely good to see the market continuing to push higher. And we've seen some other more focused areas continue to push a bit higher as well. Many of the headlines that we've seen over the course of the past few weeks with the broad rally that we got there during November, seeing some laggard areas of the market have continued to push higher and causing some questions to be raised. Are we beginning to see some rotation trades? Are we potentially looking there to have technology moving out of the kind of top spot that it's maintained across most of the rankings we've seen over the past several years? And in looking at one of the kind of broader, more technology-focused funds, being that Invesco QQQ Trust, ticker QQQ, there on the platform, hasn't really shown that much deterioration. Other names such as energy and financials are showing more rapid improvement over the past couple of weeks. But I mean, you look at the chart of Qs and that thing printed a new all-time high there yesterday as well at a chart level of 305 after breaking a bullish triangle pattern last Friday there on November 27th at 300. And then pushing past that level, which was previous high that was previous reached in September, continuing to push higher, showing that further follow through to the upside at that chart level of 305, making that new all-time high on the default point ticker chart there for QQQ. We also see that Qs has a pretty strong fund score still, 4.46, a little bit lower than where it was previously, but still in very solid territory from a score perspective there. And Sara, definitely kind of interesting to see that with all these kind of headlines surrounding the rotation trade, that these other areas are certainly showing improvement, but it's not to say that some of the areas like technology are really showing that much deterioration.
Yeah, thanks, Ian. So really exciting, I think, to that triangle pattern that we've been watching on the chart of the Qs, that consolidation that's been forming on the chart since September of this year, excuse me. So I had a few emails from clients and listeners who noticed that as well last week. So that is exciting. But when prepping for today's podcast, you and I made some observations when we were looking through the various technical indicators that we have on our site. And, in terms of just the Nasdaq 100 universe, so the same, underlying index as the QQQ, the percent positive trend for the Nasdaq 100 index, so that's going to be the PT NDX, which measures the percent of stocks that are trading in a positive trend within that universe, printed higher to 82 after yesterday's trading session, telling us that the majority of the Nasdaq 100 names are trading in a positive trend. So we like to see that indicator, any PT indicator for whatever universe, whether it's the NDX, the S&P 500, and the New York Stock Exchange. We like to see that over 50 to indicate a more healthy market. The other indicator that we took a look at was the bullish percent for the Nasdaq 100 index, which measures the percent of stocks within the Nasdaq 100 universe that are trading on point and figure buy signals. So this is more of a participation indicator. When this chart is in O's, it tells us that we're on defense, and when we're in X's, we're on offense, or what we also call wealth accumulation mode. With the weakening that we saw in tech over the last few weeks, we did see the bullish percent for the Nasdaq 100 index reverse down into a column of O's on November 24th. So this put us into that defensive mode, which we've been in that column of O's since. We haven't moved lower. We've just completed the 3-box reversal. And what we noticed today when poking around the site is that, we do provide the intraday readings for the various bullish percent indicators. And we noticed that today, with today's action, the BP NDX, so again, the bullish percent for the Nasdaq 100 index, intraday value has crossed the 70 threshold. And 70 is what we need on that chart to reverse back up into a column of X's. So if things stay the way that they are, again, these charts are calculated using closing data. So, we have to wait until the end of the day, but it looks like this particular chart will reverse back up into a column of X's, telling us that more and more of these stocks are returning to buy signals, and more of the stocks within the universe are participating to the upside.
It's absolutely right there, Sarah. And I think that the point that you mentioned there initially is that we did see that reversal, into the column of O's for the BP NDX. But, it wasn't a big column of O's, right? The column of O's only lasted there for about a week or so, seeing that movement from 70 back down to 64. And then, at least at the time of this recording today, like you said, we're pulling back up to that 70% level on that bullish percent chart. And I think that that's in line with some of the other relative comparisons that we have from the U.S. sector perspective across the platform. One of those being the asset class group scores page, which is going to be a page on the platform that essentially takes all the ETFs and mutual funds and sorts them into at least one of 135 different groups that we're going to track the broad markets with, and then ranks those groups by the average score of the constituents within each group. The average score of that, the fund scores of each of the members of the group. Score goes from 0 to 6, 6 being the best. And in coming in here, there's a variety of different views that you have the opportunity to click on. One of those is the U.S. sector view, which just limits the groups that you're looking at down to the broad kind of U.S. sectors from ranking from a score perspective. And we still see technology as the highest ranked sector on that group scores page with an average score of 4.82. The score direction has moved negative, and so we have seen that score, the scores of those members within the group back off a little bit from previous higher levels that they were there earlier in the fall. But definitely seeing that maintenance from a score perspective that hasn't really declined all that much. Other areas have certainly shown more improvement recently, but we haven't seen that score from technology really deteriorate all that much, which is in line with some other comparisons we have on the platform, such as the U.S. sector ranking in Dolly. Technology still being the number one ranked sector in that broad relative strength comparison with 207 buy signals. But in a similar fashion of what we see on the group scores page, consumer cyclicals has certainly picked up some steam recently and moved within one buy signal of that technology group, or that technology sector rather, on the Dolly page. And we also see it sitting right behind technology on the asset class group scores sector view too, with an average score of 4.66. So would kind of wait to see those moves potentially kind of overtake before kind of cementing any kind of potential change there. But definitely interesting to note the narrowing of the gap between technology and consumer cyclical, Sarah, over the past few weeks.
Yeah, we've talked a lot about the consumer discretionary sector recently, which, as you said, is a high momentum sector that ranks second in Dolly. And like you said, it's trailing the technology group within the asset class group scores by less than a point, less than half a point. Um, we have talked a lot about the beach stocks, so the bookings, entertainment, airlines, cruise lines, and hotels, and how these kind of return to normal stocks, how they've been acting with the, the various news of vaccine progress and things like that. We've also talked about, the names that have really thrived during this, what we call the Corona economy, so the stay-at-home economy. But something that I particularly noticed recently is just some of the interesting pivots that or strategy pivots that are going on within some of the names within the sector, particularly the retailing sector. So for those of you that were watching the news yesterday, you might have seen the announcement that Sephora plans on pairing up with Kohl's to bring Sephora's inside of Kohl's stores. So they, trying to bring more people into the store, had to pivot. And also you can process Amazon returns now at Kohl's. So it looks like they're definitely thinking outside the box there to get people in their stores. And we've definitely seen that translate into some higher prices on the chart. We're still down tremendous amount year to date, I believe 28% year to date. But we did see yesterday's news really create that pop on the chart. And this trails just about a month ago, I believe, we saw Target announce that it was pairing up with Ulta. So Ulta is a very similar concept to Sephora. So now Target's going to have those Ultas in some of their stores as well. So it looks like we're just seeing some of these retailers have to just, like I said, pivot and really get creative as we are all living in a new normal. But Ian, you saw some developments on the dollar.
Yeah, absolutely. I mean, certainly no shortage of things to talk about from the domestic perspective here. Looking at some of these individual stock names continuing to move higher and broader markets continue to print highs. But one area that's not printing highs is just like you said, that U.S. dollar. We've seen the U.S. dollar chart, which is the ticker DX/Y on the platform, continue to move south over the past several months, and especially the past few weeks here. Reversed down into a column of O's in the month of November from a chart level of 94 down to a level of 92.50. Completed a bearish triangle pattern last week on the 25th. With movement down to 92, and then with movement yesterday, the first day there in the month of December, we got an additional O printed on that chart, which takes out the previous kind of low that was matched from August of this year down to a level of 91.50. So that's looking at a new multi-year low for the U.S. dollar, lowest level we've seen for the dollar index spot there since April of 2018. So definitely one kind of another interesting point to note there. I mean, the movement of the dollar is something that we see definitely have some effects in the international equities market, with international equities continuing to pick up some buy signals, moving back into the number 2 spot on the Dolly broad asset class ranking over the course of the past few weeks. Gained an additional buy signal or two there yesterday, moving above the 200 level to a buy signal tally of 201. And so continuing to kind of to stream higher there for the broad international equity space. Other areas have generally kind of showed positive follow through after a declining dollar, or with the declining dollar rather, commodities. And we're continuing to have commodities climb a bit higher from a buy signal perspective as well in Dolly. With the current buy signal tally of 132, now seeing 7 signals behind cash at a tally of 139. So that'll be an interesting relationship to watch. Both cash and commodities continue to be in the bottom half of that broad asset class rank in Dolly, with domestic equities, international equities, and fixed income maintaining those top 3 positions respectively. But certainly will be in some interesting areas to watch. We see that the dollar continues to move lower. Again, that 2018 low that we got down to was at 88.50. So not to say that we're necessarily going to get down to that level, but it has been there in the past few years. So will certainly be an interesting area to watch. That DX/Y chart sitting on 3 consecutive sell signals in a negative trend, and now moving down to those lows. But with that, I think that Sarah, that touches on most of what we were looking to cover here this afternoon. We'll obviously continue to keep you up to date with any kind of further movements we see going on from the domestic perspective or across markets globally, either in the daily equity report or through the media content such as this podcast. But if you wanted to get a little bit more kind of hands-on interaction with the technical side of things, especially looking at the point and figure side that we do, we did want to bring to your attention that we are having a virtual Nasdaq Dorsey Wright symposium that's going to be taking place next Thursday, December 10th, in the afternoon. So it's going to be a 4-hour virtual symposium that's going to be taking place there with multiple different sessions. And we have for those of you that are following along there on YouTube, we're excited to bring as well that we have that schedule of events that we're going to be looking at there next Thursday. Again, 4 hours and starting there at noon at 12 p.m. Eastern time. And it's going to be going all the way there up until 4 p.m. So we do have some continuing education credit that is pending for this. So if that's something that you're looking to gain a few hours of credit before the end of the year, definitely a good place to come in and keep an eye out for. This event also is not limited to users of the Dorsey Wright platform. We'll be covering a variety of different aspects from the market perspective, what we're seeing and the state of the market, as well as taking a little bit of a deeper dive into some more specific areas of the platform for those that are subscribers. So again, that event is going to be next Thursday, December 10th from 12 p.m. to 4 p.m. Eastern time. If you're looking to register for that event, you can do so there through the daily equity and market analysis report. The registration information can be found in the Were You Aware? But definitely something that we are pretty excited about, and we hope that you all are excited as well, and that will go on there and register. So with that, also want to thank everyone for joining us there this week, and we look forward to having you back next week.